Morning folks, it's Wednesday, 3rd of October here in Thailand, 7 in the morning. So the US markets have just closed. I think I'm starting to get a grip on the dollar at last. I mean, it's been hard to get a grip on the dollar because we haven't really done anything, of course, and I've been desperate to spot a trend, as you know. I think I'm getting somewhere. So I did say that we could probably rally up, test this level. This is the weekly chart. We've got a lot of resistance going on here with the 100-week, 200-week moving average. So this is where I saw resistance, as you know from my last video over the weekend. I'm really just repeating myself, but because I think I know what's going on, I wanted to just do another video. So we were selling the dollar index at 95, 55, 65. That worked. We topped at 95.75 and we've pulled back below this trend line here. We've got the 500-day moving average at 95.42, so we need to get back below there. We're not far above it at the moment. A little bit overbought on the daily chart. Let's just have a look at the weekly chart again. So what is that value? 95.38 is or 95.39 is the value of the 100-week moving average. So we need to get back below there. But we have held a 200-week moving average. So that looks good. Let me just check the monthly chart to remind myself. Oh yes, we've got the 500-month moving average at 95.85. So of course we've just held that, as well as that trend line, which we have obviously on the weekly chart as well. Yeah, this trend line up here, it looks obviously a lot further up when you look at it on the weekly chart. So I think we're going to trade within this channel. I think we're going to hold the moving average resistances on all the time periods that I've shown you. I think the market is going to trade lower. Obviously, if I'm wrong and we get above 96.00, then that changes things. So for now, this looks like a low risk trade, being short with a stop, well, preferably above 96.00. Let's see how it plays out. What excites me is the euro held 115.00, 114.95. Now, I think I had my level a few pips below. I think I had 115.00, 114.95. Now the fact that that's held as well is very encouraging to my theory of a weaker dollar. So this euro could really push up now, and maybe we can call this an inverse head and shoulders pattern, which if we break, I know we've got a long way to go to break up above 118.00, but that would complete it, and that would give us a significant upside target of, well, you're talking about 500 pips from 118.00, so we could get up to 123. Anyway, we'll have to deal with that one if it happens, but for now I'm satisfied that we've held strong support down here from the trend line, the 61.8 61.8% fib, and the 500-day moving average. A nice little confluence of three areas there which we bounced straight off, just as we became oversold. Don't think the weekly chart is telling me anything extra. Well, a little bit there. 100-week moving average and a different trend line that I've got on here as well. So we've held all of those. Let me just check the monthly while I'm at it. No, nothing extra on the monthly. Okay, so euro helps to confirm my theory that the dollar's going to sink and the euro is going to rise. We've got the dollar yen, which is a slightly different animal when you're talking about dollar weakness, because obviously the dollar's been strengthening significantly against the yen lately, despite the fact that the dollar's been going sideways. It's held, the dollar yen's held these levels up at around the 113.90, 114.00 area, where I did say we'd run into some resistance. I've got a feeling it's going to go down. I don't have any strong evidence really, but we are quite overbought. So I've got a feeling that we will trend lower dollar yen. Now I haven't been interested in silver for a very, very long time, but silver is just started to get interesting. So we've got what looks like a potential double bottom, slightly odd shaped, elongated double bottom, but we had this low down at 1371. We had a low down at 90 last month. This is a monthly chart. If I go a little bit closer in on the weekly chart, you can see that we've got this channel. I quite like this channel here. There's the upper trend line, lower trend line going back to June 2016. We bounced right off it. We didn't get a particularly bullish candle down there, so I wasn't getting particularly excited about it. But very oversold on the weekly chart. Stochastics just starting to look bullish now, widening out, moving back above that 20 line. So that looks good on the weekly chart. And then when you go to the daily chart, you've got this little move up, which initially halted exactly at 1470 at the 23.6% fib. So I thought, okay, that's fine. We're still in the bear trend, nothing to get excited about. Down we go. 1435, 1430 area held, however. So if you did short it and buy it back at that first support level, it was a great trade. But now we're pushing back above 1470. Now I know we spiked up yesterday and pulled back again, but today we're holding the 55-day moving average and we're looking like we're pushing back above the 23.6% fib. So this looks pretty good to me when you bear in mind what I've just shown you on the weekly chart. Silver might just be about to have a good rally, a really good rally. So I think it could be worth buying silver, maybe with, say, a 20-point stop around 1455, 1450. And let's just see if we can push on. There's 1455 is the high of that candle. So maybe a little bit wider stop if you can. Maybe, well, below 1430 would be ideal, of course, because that's that spike low down there. Anyway, silver looking good. Now I'm going to show you gold. Right, key to gold is this trend line that goes back 13 years. And obviously we've been hovering below it. It's around 12.15 at the moment. We've been hovering below it, but we haven't dumped. We haven't seen the sell-off that you would have expected. We're just trading sideways mostly. It's been very difficult. We came up to retest it a couple of times. Here's the candle that I thought was going to send us lower last week. But then we've recovered this week. And we're heading back up to the trend line. Actually, on the weekly chart, it's at 12.11. So we're not a million miles away from it at the moment. And you can see the stochastics down there at the bottom are looking quite positive. Now, on the daily chart, lots of congestion, not much of a pattern for us to go by. We've unexpectedly broken back above this trend line now very, very strongly and moved straight up to that resistance at 12.08, which we know all about from the month of September. September. The high yesterday, 12.08, so bang on that 23.6% fib at 12.08, which has worked so well. If you sold it, you're doing okay. There's a couple of points in it at the moment, but I'm suspicious. I fancy a move above 12.11, 12.10, 12.11. We get through 12.11, 12.12, and this is going to be a really good buy signal. Watch this carefully. I've got a feeling it's going to happen, just because I think the dollar's going to go weaker. I like the look at silver. Gold would then confirm all of this on a move above 12.12. So watch it and be ready to get in. Going with my theory of a weaker US dollar, we look at the Aussie dollar chart again. You know this one, I've shown it to you before. 10-year trend line, which is holding. So this is contradicting, sorry, this is matching what I'm saying about a potential weaker US dollar. Aussie dollar could strengthen against the US dollar as long as we continue to hold this trend line, which is down at 71.35. So we're trading about 50 pips above it at the moment. If we go to the weekly chart, you can see we've dipped back towards this trend line. So maybe this is a buying opportunity. Maybe. We'll need to get above the weekly trend line, which is a long way away at 73.43. So we'll worry about that another day. On the daily chart, doesn't show us anything really. A potential inverse head and shoulders pattern. Left shoulder, right head, right shoulder. We'd have to stick a neckline on here. It's going to be a very much a downward sloping neckline. Oops. There we go. No, that's not working. I'll have to stick it on a 1 second. There we go, zooming in. So we've got this neckline here at 72.94. So we need to rally another 100 pips or so to start breaking up through the neckline and the 55-day moving average and this little trend line here. So there's going to be some congestion there, but at the moment I'm starting to wonder if the Aussie will reverse and start heading higher. New Zealand dollar, I could give you a bullish argument. There's a trend line going back to June, 1, 2, 3.5 months. If we hold that, and we did yesterday, we could be forming an inverse head and shoulders pattern here. Quite a clear one actually. Left shoulder, head. This could be the right shoulder. So I put this neckline in thick purple colour, 66.80, 66.90. We get up through there, we've got a completion of the inverse head and shoulders pattern. and then we can have a move of the magnitude of about another 200 pips up. So from say 6700, we could certainly get up to 69 as the first target for the inverse head and shoulders pattern. So there's some bearish arguments for the US dollar, bullish arguments for the New Zealand dollar, Aussie dollar, definitely the euro, and silver, and potentially for gold today. Let's see if gold gets above that 1212 area.